You're listening to Southeast Radio's Business Matters, with thanks to Wexford Insurances. Wexford Insurances. More information at wexfordinsurance.com.
I'm joined now by George Delaney from Delaney Corporate Finance. Good morning, George, and thank you for joining me.
Morning, Karl. Thanks for inviting me in.
George, just to start off, can you tell me a bit about your own background, please?
Yeah, I'm a chartered accountant, qualified about 20 years ago. Worked with one of the big four firms, and after I did my basic accountancy training, went into corporate finance with them in Dublin. Spent a few years in Chicago as well before coming back to Ireland, and subsequently moved to another firm out in Belgrade in Serbia, where I set up a corporate finance department for them. I then moved back to Ireland, moved down to Cork, got involved in an early stage environmental company in the industrial composting sector. Went in as their first finance person, subsequently became a general manager. But at that stage then, due to both my wife and I are from New Ross and we were expecting our first child, we decided to move back to the southeast, and we both moved back down to New Ross. And that was after about a 17-year break. That's when I joined one of the banks in Waterford, and that was in September 2007. So obviously the banking sector hit a bit of a bottom around Christmas of that year, and I left that bank about 2 years ago and set up my own business, Delaney Corporate Finance.
Quite a funny time to set a business up in 2010, I suppose, in the mother of all recessions, when it's harder than ever before to get access to finance.
Yeah, like a lot of people would have said, why don't you just sit it out and see what happens, take in your salary. I suppose two things, that's just not by my nature. I wasn't just going to sit back and thread water. I put too much work into my career to that point. But probably from a business point of view, I thought, well, look, this is the chance to get out there and make a name for yourself. A few years before that, it would have been no business for me because everybody could access finance without any bother. Now there was a challenge, and this is where I could actually help people out and add a bit of value to their business.
And tell me, since you started in business 2 years ago, what type of clients have you attracted?
I probably would have initially focused on people who had been having difficulties with the banks and helping them negotiate with the banks. And I also would have gone in on behalf of a couple of banks into clients to look at their position for them. At this stage now, that probably takes up maybe about 40% of my business. The other side of my business then would be in small owner-managed companies who wouldn't have an in-house finance person themselves, and I provide that kind of service to them. So these are companies who are going places, maybe expanding new markets. It may actually be a startup. So I have companies in organic food, IT and renewable energy.
From your experience, how open are the banks to renegotiating debt at this stage?
The first thing to remember, it's a very slow process. There's not an awful lot of consistency there between the various banks and even between the various branches. The banks are very much focused on trying to reduce debt levels, so they're putting a lot of pressure on companies to keep on paying principal, and that's just not always possible. But yeah, it is extremely challenging, particularly in the area of working capital. And sometimes when you're going in to renegotiate, it's an opportunity to increase margins as well, which doesn't actually cure the problem. So
what you're finding is that when you do actually approach a bank with a view to restructuring debt for a client, they're looking to increase the interest rates.
Yeah, that's what they've submitted business plans to Europe saying they're viable banks, and part of that is increasing their margins. And I don't know if somebody has thought that all the way through, but that goes all the way back down to the individual borrowers, and that's putting increased pressure on all of them. Some of the issues that come up with structuring is, I've seen cases where the bank has kept the client under pressure just to see if there's actually other sources of finance or of equity to put into the business. And I think it's important that you actually have to sell a little bit of a story to the guys as well. Show them that they're getting everything that the company can safely give them, and then that the company is actually going somewhere so that they will actually get that debt reduction in maybe in a year, 2 or 3 years' time.
What advice would you give to business owners out there today that would be struggling from a cash flow perspective?
You have to manage your cash and manage your debt like you would like any other resource. And a couple of little things. There are some types of finance appropriate for that, be it invoice discounting, and that may or may not be accessible. But in other cases, you have to concentrate on cash as well as profit. Make sure your paperwork is in order so that there's no excuses from your debtor not to pay you. Possibly be selective with your customers. You may be more profitable, but maybe he's a slow payer, and you need to focus on the guys who are getting the cash into you, because that delay in cash is actually costing your business, both in terms of interest on your overdraft and more importantly your own resources and the stress it puts yourself under. Be careful in terms of your expansion plans, and don't overtrade. It's many a profitable company went out of business because they overtraded. That's particularly important for a food company who's looking to go into say, some of the larger supermarkets, because that can be a very slow process, long lead-in time, and it may be quite a while before you get your first payment. It'll be quite good after that, but you have to bear that into all your plans, whether you're budgeting or forecasting.
You mentioned there invoice discounting. What is that, and how easily accessible is it?
Well, look, your debtor's book is like any other asset. It has a value. So there is a vehicle out there called invoice discounting, where basically the bank will lend against that. So it's a bit like a current account overdraft or a stocking loan. And basically what happens is you issue an invoice out for €1,000, and the bank within a couple of days will give you 80% or 75% of all of that. And then when the debtor comes in, that gets paid back to the bank. So there's it has to be administered pretty tightly. There's a lot of work involved in that, but it is a useful tool. One of the issues I'm seeing is that not everybody can actually access it, because inadvertently, without thinking, they've given a fixed and floating charge to their main banker, and that floating charge is what the invoice discounters require. That's the security over the debtor, and you've already given that away. You don't have it to give to somebody else.
You have a very unique skill set, being a qualified accountant and an experienced banker. What are your thoughts on NAMA?
I've done quite a bit of work with NAMA on both sides of the fence, in that I've made submissions on behalf of clients into NAMA, and I've also done a little bit of work on behalf of NAMA in reviewing some of those submissions. It's extremely slow, and it's been very slow getting to where we are today. I'd have concerns over some of the objectives that they have for 2012 in terms of what they're going to offload onto the market. We heard a lot of talk in the last week about the market has bottomed out. There's an awful lot of residential property on NAMA's book that hasn't come to the market yet. And a lot of that is going to come to the market in 2012 and 2013. And I think what we're going to find is that in another 12 months, and we'll be 4 or 5 years into the process, we may not have moved on an awful lot.
Do you think that NAMA are going to give the property away that they have on their books?
No, I think what's eventually is going to happen is that they're going to start selling off chunks of the loan books at discounts to external purchasers. It's like what happened in Eastern Europe back in the 90s. Non-performing loans were sold to investment banks at a discount. I think we'll get to the stage where that'll have to start happening. I think NAMA have actually tendered for some of that in some of the other markets outside of Ireland. But there's an awful lot of stock there, and at the pace it's going, how long is it going to take to offload all of that stock? The big problem is there's nobody there, nobody can access the finance to actually buy a house.
From the perspective of asset finance, is there much of that available out there today from your experience?
I would have been looking for asset finance in Ireland over the last 12 months without much success. I think most of the major players have gone out of the market. Now, I have heard some anecdotal evidence recently of it happening, but it's certainly not easy to come by. We have access asset finance for a customer there recently, but we've done it in the UK.
How important is a balance sheet to the banks today when they're looking at restructuring?
Balance sheet is key, because basically the banks are lending against security, so they need a realistic balance sheet, and that's part of the problem. Everybody's balance sheet is taking a hammering. What's your main asset is probably bricks and mortar, and that has taken a bit of a hammering. So that's what the banks are looking at. You have a good news story, a strong business, but there's no security with which to lend against, and that's a bit of a fundamental problem for the banks and obviously for the borrowers.
I've heard a story recently where a client of one of the big banks went to them with a view to obtaining an overdraft of 150,000, and he was asked for 150,000 cash deposit to be lodged with him to get that facility. What's your experience of that?
I have to say I haven't experienced that, but what I have heard is just blank nose. Sorry guys, the security is not there. You'll have to make do with what you have.
You'd see some of the banks out there and they'd say on their window that they'll approve 9 out of 10 loans. It's easy to approve loans when you have conditions like that attached.
It is, but it's 9 out of 10 once it gets into the system, and it's hard to get into the system.
What are the green shoots and where are they coming from out there from your perspective?
Well, look, there's a number of sectors we all hear about. Green energy is a particularly strong sector. The IT, even though we're also waiting for the next large indigenous company, I think we actually have to move up the value chain. The next indigenous Google or Facebook. We've been providing services into them, but I think that's only a matter of time. And our food industry is one that's very important to the country, because what's great about the food industry is it can create employment throughout the regions, and it's very important for the SMEs. And that's one that's probably not as supported as well as it could be by a state. There is money out there for certain sectors, and the food industry is not one that's particularly well supported.
What advice would you give to business people out there today in terms of managing their relationship with their bank?
Like anything to do with business, relationships are key, and particularly with your bank. And they call the manager within the bank is called a relationship manager for a reason. So by building up a relationship with your relationship manager, at some stage he's going to be batting for your case internally within the bank. So it's important that you have a relationship there with him, a relationship of trust and a relationship of transparency. So I would advise to do your homework before you go rushing in. Don't go rushing into the bank, do your homework, but contact the bank as early as possible and keep them informed. And don't be afraid to give them the good news stories as well, so that they know they don't want communication to be broken down and wondering what you've been up to for the last 12 months. So keep them informed, give them the good news stories whenever they do appear. And if there is a difficulty, as I said, do your homework, but but meet them early. Don't leave it too late. The worst thing that can happen is for them not to know what's going on, because they'll assume the worst.
Okay, so communication is key. Would you recommend that somebody would contact their manager once a month, once a quarter, with an update in terms of what their own business is doing?
Well, I think, going back to what I was saying about going in restructuring, you go in and try and sell a story, so you have a plan behind the numbers. And that plan, like any plan, should include milestones. And don't be afraid to kind of tell your relationship manager that, yeah, I've hit that milestone. What I said I was going to do in July, that came through. He may see some of it coming through your bank accounts anyway, but it's no harm to kind of tell them the good news stories as well.
With regard to your own business, what are the challenges for you and for Delaney Corporate Finance?
For me, what I've been doing when I set up the business myself in terms of obtaining work, I had a zero client base starting from scratch, and I went after what you could call, I suppose, the low hanging fruit, people I knew in business and in banking, and the like, to try and get work out of them. That's very labour intensive. And now what the stage I'm at now is where I'm trying to actually build a profile and get to the stage where business will start coming into me. So I'm starting to see that now after a year and a half. I'm starting to get referrals, and what I want to do is keep on growing on that. So, like, for example, I'm just rebranded, launching a new website the next week or two, and that's all part of building up the profile of the business. A lot of my work to date would have been in Munster, down Cork, Kerry direction, again, because I lived in Cork for 5 years. That's where a lot of the network of contacts has. I'm now trying to focus a little bit more on the southeast. That'll be, it's another market, and it's easier to do the work closer to home. You spend less time in the car. Well,
George, it's been very insightful speaking to you this morning. Thank you very much for coming in, and I wish you every success with Delaney Corporate Finance.
You're listening to Southeast Radio's Business Matters, with thanks to Wexford Insurances. Wexford Insurances, #1 for business insurance in County Wexford.